He made $1 billion, then one trade, destroyed it all. Wall Street called him a genius, the man who believed he had figured out the market. $200 million became billions. More money, more confidence, more risk. Success can be dangerous when it convinces you that you're different. By 2021, Bill Hwang had become one of the most powerful investors in America, yet most people had never heard his name. He didn't appear on television, he didn't give interviews, and he didn't live like a billionaire. But Bill Hwang was not born into Wall Street power. He came to America from South Korea with a simple dream, and eventually he caught the attention of a Wall Street legend. Julian Robertson, founder of Tiger Management, on Wall Street. His protégés were called Tiger Cubs. Bill Hwang's rise seemed unstoppable. Working under Julian Robertson opened doors that most investors could only dream about. Tiger Management wasn't just a hedge fund, it was a factory for future Wall Street stars, and Bill Hwang appeared to be one of the most promising. But success has a way of changing people. The bigger his positions became, the bigger his appetite for risk. Then, in 2012, everything came crashing down. US regulators accused Hwang's firm of insider trading. His company paid millions of dollars in penalties. The scandal shocked Wall Street. Many banks stopped trusting him. Some refused to do business with him at all. For most investors, that would have been the end. Their career would be over, their reputation destroyed. But Bill Hwang wasn't finished. In fact, his biggest gamble was still ahead of him. Most people thought Bill Hwang was finished. Wall Street had moved on, his reputation was damaged, and many banks wanted nothing to do with him. But Bill Hwang had a different plan. Instead of running a hedge fund, he created a private investment firm called Archegos Capital. That changed everything, because Archegos wasn't managing outside investors. It was managing Bill Hwang's own money, and that meant far less scrutiny, far fewer questions, and far more freedom. As the years passed, his positions grew larger, then larger still, until some of the world's biggest banks started lending him enormous amounts of money. Again, billions of dollars. And this time, almost nobody could see the full picture. Bill Hwang was no longer just investing his own money. He was borrowing enormous amounts of capital from some of the largest banks in the world. Credit Suisse, Nomura, Morgan Stanley, Goldman Sachs. Each bank believed it understood the risk. But there was one problem. None of them could see the full picture, because Hwang had found a way to build massive positions without publicly revealing their true size. Using complex financial instruments known as total return swaps, the system worked brilliantly. As long as prices kept rising, and for a while, they did, his fortune exploded. Billions became tens of billions. Confidence became certainty, and certainty became something far more dangerous: invincibility. If one bank had seen the full picture, the story might have ended very differently, but that never happened. Each bank only saw a piece of Archegos, a position here, a position there. Nothing seemed unusual, but behind the scenes, those positions were connected. Bill Hwang was making the same massive bet through multiple banks at the same time, and no one realized how large the exposure had become. By early 2021, the numbers were staggering. Archegos controlled positions worth tens of billions of dollars, built on borrowed money, and as long as the market kept rising, the system looked perfect. But perfect systems rarely survive reality. Then reality finally arrived. In March 2021, one of Archegos' largest positions began to fall. Viacom CBS. At first, the decline seemed harmless. A few percent, then a few more. Nothing unusual for the stock market. But Archegos wasn't built for normal market conditions. It was built on leverage, massive leverage. Every dollar controlled many more dollars, and as the stock continued falling, the losses multiplied. What looked like a small decline on a chart was becoming a financial emergency behind closed doors. The phones started ringing. Risk managers wanted answers. Bank executives wanted updates. And For the first time in years, Bill Hwang was running out of options. Then came the call. The call every leveraged investor fears, margin call. The banks demanded more money, immediately. But there was one problem. The money wasn't there. Bill Hwang couldn't meet the demands. The collateral wasn't enough. The losses were growing too fast. And suddenly, every bank realized the same thing. They were all exposed to the same man. At the same time, the race began. Not to save Archegos, but to save themselves. Goldman Sachs moved first. Morgan Stanley followed. Within hours, billions of dollars worth of stock were dumped onto the market. Block trades, massive block trades. Entire positions liquidated at once. Prices collapsed. Panic spread across Wall Street. Every bank was trying to get out before the others, and the faster they sold, the lower prices fell. The lower prices fell, the bigger the losses became. What started as a margin call was becoming a financial avalanche. By the end of the week, more than $100 billion in market value had disappeared, and Archegos was finished. When the dust finally settled, Archegos Capital was gone. Bill Hwang had lost almost everything, but the damage didn't stop there. Credit Suisse lost more than $5 billion, one of the largest trading losses in the bank's history. Other banks suffered massive losses as well, and Wall Street was left asking a simple question. How did this happen? The answer was uncomfortable. No single bank understood the full risk. No regulator saw the complete picture. And the most surprising part of the story was that Archegos wasn't a bank, it wasn't a hedge fund, and it wasn't a public company. Very few people knew how large it had become. That secrecy gave Bill Hwang enormous freedom, but it also meant that warning signs remained hidden until it was too late. And no one asked enough questions. The system trusted leverage. The system trusted complexity. The system trusted that someone else was watching. They were wrong. The collapse of Archegos exposed a hidden weakness inside modern finance. A weakness that still exists today. Because risk doesn't disappear, it only hides, waiting for the next person who believes the rules no longer apply to them. And that's the most dangerous moment in finance. The moment success convinces you that you cannot fail.